There is no white knight this time, with the exception, theoretically, they could blow gold to 25,000 an ounce, 50,000 an ounce. The white knight would be the central banks that hold gold, and then their balance sheets get reflated. That said, $25,000, $50,000 gold completely breaks confidence in the credit markets and breaks confidence in the currency market. And that's exactly what where we're headed on a global basis, is that this is going to be a currency/credit crisis. And there's going to be a complete rethinking of what the foundation is to the financial markets.
Financial experts warn that revaluing U.S. gold reserves could significantly alter the financial system by increasing liquidity and impacting monetary policy. This move would ripple through global markets, potentially triggering a broader rally in precious metals. If gold were revalued to $3,000 per ounce, it would improve the U.S. balance sheet by roughly $800 billion. However, given the magnitude of the debt crisis, many believe that the revaluation would need to be much higher, perhaps $10,000, $50,000, or even $138,000 per ounce, to eliminate the national debt entirely. Well-known contributor to the Gold Antitrust Action Committee commentaries, BillHolter suggests central banks could revalue gold up to $50,000 to restore their balance sheets. The current debt-based system, anchored by US Treasuries, is on the brink of collapse. Holter warns there will be no white knight in the next crisis, as major institutions like the Fed, Bank of Japan, and European Central Bank are now overleveraged. This time, they lack the capacity to rescue the system. According to him, foreign central banks accelerate their liquidation of US Treasuries. He predicts the Federal Reserve will eventually resort to outright monetization to meet the government's record borrowing needs. If inflation remains sticky, the Fed could face a choice between raising rates further or capitulating to political demands to keep rates low, a scenario akin to Turkey. Second, the Treasury's need to issue more debt could force the Fed to monetize it, which would push yields higher and destabilize bond markets. Seasoned analyst BillHolter argues that China and Russia could collapse the U.S. financial system by spending just $25 billion to drain COMEX gold and silver. This would expose the fragility of the fractional reserve system. Eventually, Holter explains that those who bought gold or silver over the past decades did so to protect themselves and their families. Before we dive into BillHolter's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market.
There is no white knight this time. Every financial crisis we've had going back to, well, I guess you could say going back to 1973, 74 even, there's always been a white knight that could come in. There's always been a central bank that could step up and lend the money. 2008, 2009, the white knight turned out to be the balance sheets of these various sovereign nations and the central banks themselves. The problem is they've blown their balance sheets up, the treasuries have, and the central banks have blown their balance sheets up. I mean, the Federal Reserve has got a negative equity position right now. The same could be said for Bank of Japan, same could be said for the European Central Bank. They're all broke. They're all busted. Their balance sheets are in shambles. There is no white knight this time, with the exception, theoretically, they could blow gold to 25,000 an ounce, 50,000 an ounce. The white knight would be the central banks that hold gold, and then their balance sheets get reflated. That said, $25,000, $50,000 gold completely breaks confidence in the credit markets and breaks confidence in the currency market. And that's exactly what where we're headed on a global basis, is that this is going to be a currency/credit crisis. And there's going to be a complete rethinking of what the foundation is to the financial market. Right now, the foundation to the financial markets is debt, primarily U.S. debt that's held on central bank balance sheets, but that is the foundation. And debt, if you want to call it sand, it's a foundation of sand. Whereas gold as a foundation, gold doesn't go up and down in price. It's the currencies that go up and down, and primarily, long term, all currencies go down, and long term gold goes in those currencies. So I think that's my answer, is that there is no white knight this time. The problem is they're going to try to reflate. And like you said, who's going to be the buyer? Because we're already seeing China, we're seeing Japan, we're seeing other nations liquidate treasuries at a time that the US Treasury has the biggest appetite in its history, simply because, well, if for no other reason, because now we're paying $1 trillion a year, over $1 trillion per year in interest alone. So that's a confidence breaker. But at the same time, from a fundamental standpoint, you've got foreign central banks, sovereign treasuries liquidating US Treasuries. Who's the buyer? And the buyer ultimately will be the Federal Reserve, and it will be outright in-your-face monetization. Well, Francis, as far as China and Russia attacking the U.S., it would cost them not even a ham sandwich to do it. I mean, they put together $25 billion. That would completely clean out COMEX silver, COMEX gold. Everything would be delivered, and you'd have many contracts standing for delivery that could not be delivered on. And for nothing, with no shots being fired, no bloodshed, the American way of life would be over, because that would be proof that the fractional reserve system is fraudulent. $25 billion in today's world is nothing. Actually, $25 billion today is, call it 4 or 5 days U.S. debt accruance. I mean, we're accruing what? $5 billion a day between interest and new borrowings. I would say anybody who bought gold or silver over the last 5, 10, 20 years or longer even, they did so to protect themselves and to protect their families.
Yeah.
The problem is the math is so bad, and the math now is so obvious, that you've got more and more and more investors worldwide that are coming to the same conclusion, coming to the same answer. Collectively, they're creating a supply and demand deficit. The demand is increasing. Supply, I mean, mine supply is not increasing any longer. There's not been any major discoveries or finds in the last, since 2011, 12, 13, so over 10 years. The buyers or the holders of gold are going to be villainized. They will be called victims.
In the interview, BillHolter warns that Americans must now live below their means to repay decades of overspending. Holter warns that at $10,000 to $50,000 gold, the US Treasury's borrowing power would effectively vanish. However, he warns of a worsening liquidity crisis, predicting inflation in essentials and asset deflation in terms of gold. BillHolter sees an imminent silver delivery failure that could unravel confidence in the entire derivatives market. Highlighting a critical imbalance, Holter notes that global silver demand consistently exceeds supply annually. He warns this shortfall could soon trigger a failure to deliver in physical silver markets. In 2024, total silver demand exceeded total supply by 148 million ounces. This year, the shortfall is forecast at 118 million ounces. You know things are out of whack when the world's silver supply starts to look like your checking account, running a deficit 4 years in a row and still pretending everything's fine. Meanwhile, COMEX silver inventories, a key liquidity metric, have collapsed to 150 million ounces, near decade lows. This scarcity creates a short squeeze risk. Institutional shorts holding 20% of COMEX's open interest may be forced to cover as prices climb, exacerbating rallies. Let's get back to the interview.
Math doesn't lie. And the bottom line is, Americans have lived far beyond their means for 50, 60 years. I mean, go back to, till right after World War II. America has lived beyond its means. It had basically an unlimited credit card with no limit, and we've lived off of that. The reverse of that, not only do we have to come back to living within our means, but to pay back previous overliving, overstandard, whatever you want to call it, we've got to live below our means. The standard of living in the U.S. is going to, and I'm not picking on the U.S., but it's because the standard of living is more outsized compared to our means than other nations. So our standard of living is going to drop further than anyone worldwide. Don't make the mistake that the entire world is going to have a standard of living because paper is going to blow up. The naked king moment is going to happen. And when people, the little boy points and says, hey, the king's naked, doesn't have any clothes. Everybody worldwide is going to be looking at currencies and say, hey, wait a minute. I've got this or I've got that or I'm selling whatever. But I'm not taking that paper. That paper is worthless. And when I say paper, I'm talking about currencies all over the world. The fiat experiment has and is failing. When you add all those buyers, all those people that made a decision that The math does not work in a fractional reserve system that has no backing to the currency. People made those individual decisions, and when you add them together collectively, a low gold price shows confidence and a high gold price shows a lack of confidence. And if you got gold going to the moon, it's a thermometer. No matter how hard they've tried to break that thermometer, well, really before this, but since 1996, they have tried to break the thermometer and have it give the world a false reading. And that false reading, they did that in order for confidence to remain and the US Treasuries credit card remain open. But $10,000, $20,000, $50,000 gold, that credit card gets canceled. Demand right now is globally is roughly 1.3 billion ounces. When you add in all the medicinal uses, technological, military, don't forget military. I mean, each tomahawk has over a monster box in it. So if you add all that together, you're about 1.3 billion. If you look at global supply, it's about 850 million ounces. So you're talking about literally 450 million ounces, which is about 50% of what production is. Now, as far as above ground supply, those numbers are very, very difficult to discern, but we do know all of the big supplies. For instance, the biggest one back in the 90s, early 2000s was the unwinding of the Manhattan Project. That was about 2 billion ounces slowly flowed into the market and supply available and pricing under wraps. I don't know of any huge above ground hoards that can meet this. I mean, I think we're running head first into a failure to deliver because there's just simply, in a game of musical chairs, there's simply not enough chairs. It's everything to do with how you survive, how you live. I mean, if grocery stores aren't open, I mean, if the credit system, when credit goes down, nothing will operate. And I question whether or not electric companies will operate. I question whether the water companies are going to be able to purify water. Everything that you do on a daily basis involves credit. You may not think so. Everything that you do, you pump gas. Well, how did the gas get out of the ground? Or the oil get out of the ground? How did it get refined? How did it get brought to the gas station? There's credit used on every single movement. A loaf of bread, there's probably a dozen different uses of credit to get the wheat or from the field itself to the grocery store. There's at least a dozen uses of credit. If credit fails, the availability of goods will completely stop. And at that point in time, you will have what you have, and that's all you're going to have.
As the third quarter of 2025 has come in full force, the question isn't about whether gold can stay afloat, it's how far it may sail on these ruthless winds. Treasury Secretary Scott Bessent recently stated that the US is looking to monetize its assets within the next year. If the pillars of the current financial order are crumbling, how prepared are you for a future where gold and silver are no longer just assets, but lifelines? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.